Good morning, Douglas. How is your day?
Hi, everyone.
It's a beautiful day in the neighborhood. I'm a little slow connecting the disclaimer there. I put some real positive disclaimers on there today because um, I thought the topic today was appropriate today, but it's not mostly what people want to talk about. But why not talk about something people don't want to talk about?
Yeah, I'm not real excited to talk about
Yeah, you should be. You should be. See, generally speaking, a prepaid funeral may cost less than otherwise. And I was in a really highly stressful situation about a year ago with a family in the funeral home, and the patriarch of the family, when the funeral home director said, let's talk about the casket, the patriarch said, Keith, you make that decision for us. And there's 20 people in the room. And so I was like, kind of had an anxious smile on my face and watched the body language shift around the room as everybody was kind of navigating that conversation. I think that happened because a decade earlier, I'd asked him to go to a meeting with me in Evansville as I was pre-purchasing and prepaying for a funeral for my mom, and she was perfectly still alive. She wasn't healthy. She had some dementia going on, but I had gone into two funeral homes, and he went in with me, just kind of sitting there watching. And I said, "Here's what I want. I want A, B, C, D in a funeral. Um, I just want to explain it to you face to face. And here's my email. Once you've had time to process that, I just want your best price. That's all. I'm only making the decision based on your best price." Then I drove across town to the other funeral home, gave them the same conversation, and they both heard the same spiel. They both gave me a apples to apples comparison for a funeral, and there was $1,000 variance between the two of them. And
That's not bad.
I went with the lower price one.
Yeah. I mean, what's a funeral cost?
Well, a decade before that, my dad's cost $10,000. This was, most people aren't doing that type of funeral anymore. There's a lot more cremations going on today, and that's going to be substantially less. But a funeral in Evansville in 2003 was $10,000, and then when I bought a prepaid one in 2014, I got it for $9,000. In that conversation, though, the one who priced it higher than the other person, when I called him back to say, "Hey, I'm going to go with the other guy," he offered me another $1,000 off.
Oh, that's the old parking lot pavement trick. If you've ever had a parking lot paved.
we can make you a better deal. And I told the fellow, I said, "I appreciate your knocking $1,000 off, but I'm sticking with my word." So the reason we jumped into this,
perfect funeral has gone up in price like everything else has. I'm pretty clueless. I don't know.
I would imagine they probably have not. There's a lot of pressures grinding at funeral homes because the cost. I think the cost of a cremation is somewhere between $1,500 and $2,000, and so more people are feeling the pinch of budgets. They're thinking, "Hey, I don't really care about spending that money on it."
Or if people even have funerals.
Yeah, so part of where the funeral home makes their money is by, as crazy as it sounds, they're renting out the space for a funeral. If you don't have a funeral, they don't get that part of their revenue stream. So when you go through the itemized list of a funeral, there's all kinds of different things that are listed in there. And so why I said, to prepay it is that like a key component of prepaying as well as pre-planning, those are two different things. The prepaying just lets you, in an unemotional moment, look at the itemized lists and go, "Yeah, I don't know if I really want that." But if you don't prepay or pre-plan, there's a lot of emotions that are flowing.
Yeah.
And so,
But they're using today's dollars.
right.
I don't know. Maybe there's some innovation that goes on with funerals and burial and cremations. But if I could buy I don't know when my time's going to expire, but if I could buy like let's say a 2050 Tesla at today's prices, I'd probably do it.
Right, right. And there's all kinds of thoughts that go along with that, um, and if you buy a prepaid one, what you're generally doing is just buying an insurance policy, and they generally put an inflation factor in there, and it goes for most everything on the funeral, except for I don't think they put it on your obituary and maybe
Flowers and stuff.
they may, no, I don't think they do on the flowers either. So those are things that you just have to kind of think through. And I was going to show a video here if I can find the setting on here. But any other thoughts on that component of it, Doug?
Well, I have not prepaid my funeral, but I have pre-planned my funeral. And this conversation makes me want to dust it off. I wrote it out in pencil. And it was basically a guide that I think it's Flannery Buchanan gave us.
Yes.
And
Yeah.
you know, what's all these people and stuff like that. Who do you want as your pallbearers?
This
And
one, that-
yeah, there it is. There
Yeah.
it is. This
Yeah.
Keith has his right here. Or is it?
No, that's
Oh,
just-
this is just a
that's a-
template of one.
That's good.
Yeah, this is really great. And you could probably find this on the internets. But yeah, it's a great thing to just go through and have written in pencil. That way you can make an adjustment when you need to, but pre-planning versus pre-paying, anybody can pre-plan this thing.
Yeah, I was going to show a video to our friends, and I'm wanting to make sure I have the setting, but I don't know what the setting is. Oh, there's one that you have to touch on here to make sure that a video plays, and I'm not seeing it, so I'm going to try and play it. How's that? And see if
Yeah, go for
it gets there. And I had sent this video to you earlier in the week.
Is this the Milton?
Yeah, this is a YouTube video, and so I'll go to my history here real quick and find it. If I find history, your channel, your history.
I mean, everyone has a favorite economist.
Yeah.
You know, and that's what a lot of my conversations are. Who are your favorite economists?
So I can take all these trips because
I
my
know
client
she
has all
does.
these amazing deals.
Yeah.
Well, you know, you can
I'm
spend,
gonna pause this. Were you offering insight, Amanda?
You can't see that.
Oh, okay, I will share my screen with you guys here. And then I'll get this. I should have.
Libby's in the truck running the productions today. She's in the production truck, making sure everything's visible and sound check is okay.
Yeah, we'll see if you can hear this. I'll give this a quick play. It's a minute and a half, so.
spend your own money on yourself. And when you spend your own money on yourself, you're very careful of what you spend it on, and you make sure that you get the most for your dollar. You can spend your own money on somebody else. You give gifts to other people. You take people out to dinner. And when you spend your own money on somebody else, you're very careful that you don't spend too much. You try to keep down the amount you spend, but you don't worry very much about what the other fellow is getting from it. You don't pay anything like as much attention to the gifts you buy for other people as to the things you buy for yourself. Or you can spend somebody else's money, as when you're spending the government's money. I say the government's money, the taxpayers' money, which the government has control of. Now you're spending somebody else's money. Let's say you're spending your boss's money. You're out to lunch on a expense account, but you're spending it on yourself. You're very careful that you get good things for your money. You try to have a good lunch, pick the right things, but you're not very much worried about whether you get the cheapest, spend all you want, and you'll be careless. Now, what happens when you spend somebody else's money on somebody else? You're a distributor of welfare funds. Well, you're interested in making your own life as good as you can. And most people have humane instincts and want to do the best they can, but you're not going to be anything like as careful in spending somebody else's money on somebody else. So there are 4 ways in which you can spend money.
So that's the picture of why I brought that into this equation is that I've been in the room with buying a funeral when it wasn't prepaid. And those ways of spending money is generally spending somebody else's money when you're buying a funeral. If you're the child or the relative and you're spending it on somebody else. And so the spending process is a lot different in that situation. There's a lot of emotions that are going on, and there's a lot of situations that probably more money is spent than necessary on those things. And that's why it's easy to have a conversation today, because it's not really that emotional today, right?
Yeah.
Well, the reason we brought this topic up is Doug and I are both part of our day today is we are attending funerals, and we're going to different ones. But the thought process of that kind of brought to my mind the idea of what do you do pre-planning life? Like we constantly are encouraging you to live life to the fullest, but life comes to an end, and there's things that you can pre-plan on that the more you pre-plan them, the less emotionally they really are.
Yeah, it's such a gift if you can just think ahead a few steps.
It is, and one of the thoughts that there's an old saying that an inheritance gained early or gained hastily is not blessed in the end. And so some of the life ending planning is what are we doing with our inheritance? And even in the midst of that thought process, I would say today, if you have more money than you think you're going to need during your lifetime, probably today is as good a time as any to think about gifting to your adult children. For a couple of reasons. One, I'm of the opinion that future income taxes will probably be higher, and very likely maybe future estate taxes may be higher. So if you can get assets out of your estate and into your adult children's estates, it does beyond just the tax planning. It also allows your family wealth to be managed differently. That as say I'm in my 70s and I'm managing my wealth, and my kids are in their 40s. They're probably going to be more aggressive in the way they manage that wealth. And so it may accumulate more family wealth by having it in the hands of the younger people.
Some of the ways that we've seen that done really well, just from you guys, is you've taken your granddaughter out to Ruth's Chris. You've celebrated birthdays in a big way. You've given your kids some money and said, hey, look, no restrictions on this. Use it how you want. We've seen one kid put in a sport court basketball court in his backyard. We've seen people fund Roth IRAs.
Yes.
We've seen people gift towards education. But the point that I like the best about giving now, if you can, is you get to see your loved ones really enjoy it. And probably the best way I've seen it done is a big family vacation. And it doesn't have to be grandiose. I mean, you could do a dude ranch out in Montana if you wanted to, or you might just take everybody, the kids, grandkids, to Kings Island or a Reds game. But when I hear stories about that, that just pumps me up when families are vacationing together and doing things together.
That's been kind of mentored for me, and that's been a way that as the kind of the patriarch of my family, that's what we've done. We poured a lot of our resources into that part of our family for a number of reasons, but it's a good way to kind of help pass on that generational wealth of wisdom, really, not just the wealth, but the time that multiple generations get together and get to hear the thought processes of one another is a really great benefit.
I can't imagine what it's like in Moses's day. I mean, everybody hung out together. You probably ate meals together. You worked together. I mean, you did everything together. And so to go on a trip, once every 5 years or something is probably pretty reasonable.
It is. It's a really good thing. Plus, another like old time quote was that wealth can sprout wings and fly away like an eagle. And you don't really know the permanence of the wealth you have, but if you transfer that wealth to multiple generations via buying a trip or doing something, you've built something that isn't going to find wings and fly away. It's going to be stored right up here.
It's good. Every second generation wants their parents to enjoy their money. That's the other thing we hear from Gen 2. Not necessarily Gen 3, but we hear a lot from Gen 2 is, I just want my mom and dad to use their money. I want them to enjoy it. They tell me that they want to give me an inheritance. They want to have some left over, and that's cool.
Yeah.
Everybody wants that.
Yeah.
But really from Gen 2, they tell us, I want to see my parents enjoying themselves.
Which is really a big deal. That what you said about vacation may be one of the best ways they can do it, because as you hit that point in life where your mobility starts to drop, your activity level starts to drop. And so if prior to that point in time, you're able to really pour into your family that wealth, or even your friends. I know we were able to do that for my wife's 40th birthday. We poured money into some friends and had just a memory that will never go away, right? Like it just built a beautiful thing. So you don't have to limit that kind of thing to your family. And there's friends that we've had that have done things like that to us that have really blessed us. And
I would say to people that you like, and you kind of gotta love everybody,
Yeah.
but people that you like.
Yeah, no, I mean, it's just a really cool way to spread that wealth out. And it looks, I've skimmed some of the current kind of proposals for tax increases that are out there, and I don't know if those are going to pass or not.
Yeah.
But my logic way of thinking through things is that there probably is going to be tax increases. And so if you can do things to help your family with those sort of anticipated increases, that makes a ton of sense. And the one that just sticks in my head is, if you've got excess wealth, and it's almost a no-brainer, is help your next generation or next two generations kind of fund their Roth IRAs, because that's a tax-free bucket that if you don't fund it this year, you lose it.
And the keys to that, working income,
Yeah.
have to have some income.
Yeah.
So if they do, that's a great conversation to have. Had one of those this week with a family.
Yep, and you only need one of the spouses to have the working income. So if there's one that's staying home, it's called a spousal contribution, and as long you can contribute up to 100% of the income for I think the limits are $7,000 now. So,
Yeah.
But those are a great idea. There's a lot of thoughts as you're thinking about like the aging process. We've got Arkansas Coach Broyles Alzheimer's caregiving guide. This thing is, I've gone through a lot of it, and it's a really helpful resource for people that are having some cognitive limitations as they're aging. Give us a call if you know somebody that's struggling in this area, because there's just things you can do much more peacefully. Coach Broyles' wife was dying from Alzheimer's, and he, was torn apart from that whole process, but then realized he could write this thing to help others, and find it as a great resource. We've got Financial Survivor's Guide. This thing has a lot of wisdom in it, and we've got a few of those available. 5 Wishes, ways to kind of express your healthcare desires in the later days of life. I think that's a really helpful thing, because having helped family members with these things who didn't declare them, it could have the tendency to put a lot of stress on you if you're making those healthcare decisions. What I personally did in those situations where they didn't tell me their desires, I just pretended that the body in the bed was my body, and I just made all the decisions for them as I would make them for myself. That'd be my advice to somebody who doesn't have any insight on what to do for their loved one. But this is a way where you can declare it, make it better known for them.
I think in addition to that, for those of you who have kids turning 18, now's a good time to think through that as well, because healthcare directives need to be changed, and you need to have permission to help act in their best interest.
Connie and I did that for each of the kids as they went off to college, because you don't know what kind of medical things could go on there, and the hospitals probably won't give you information if something happens to one of your kids while they're at school. And so by having the healthcare power of attorneys in place, you connect that access to those things. And it probably makes sense to even have a will for your 18-year-old kids at that point too, because there's things that can evolve, and they probably won't take the initiative to do something in their own time frame until they're probably the mid to late 20s, if even then.
Yeah, great conversation to have too.
Yeah, there's a lot to learn from talking about end of life things, because it forces you to think about a lot of the important issues in life. And And I think personally, I think the more that you address the end of life, the better you can live today. That's been my experience. Doug, what is that enough about this topic that we can switch to the markets, or will you want to talk a little more about this?
Well, I think we covered a lot of it. And, you know, if you need someone to help you with these types of decisions, there are attorneys out there who are really great. They're knowledgeable, they're experienced, and they're compassionate. And sometimes you just need someone to tell you what to do. And it's good to have an advocate. I mean, there are so many great things a person can do it yourselfer type stuff with beneficiary instructions. You can have that on your house, you can have it on your cars. I mean, you can do a lot on your own. But sometimes you just need somebody to tell you what to do, and you need somebody to guide you through it. And with that service, a really great attorney can be a powerful friend.
And I probably would add to that, I was visiting with a longtime friend this week who's in his late 80s, and he's sharp and pretty well with it, but there's a confidence I think people lose when they get in those and become octogenarians. They lose confidence maybe in their driving, their physical skills and things, and maybe even lose a little confidence in their decision making. And so to have an advocate walking alongside of you as a financial advisor is a big deal, because a lot of times we can look at things from 20,000 feet and really tell you might want to go talk to your attorney about this, or talk to your accountant about these things. And having somebody in place in that season of life, I think is a huge deal. And I'm not saying that just self-serving. I can't imagine me not having a financial advisor in my 80s, because there's just a lot of stuff that's shifting and changing, and having somebody that's on top of it, big deal. It's a big deal. Well, let's get to the markets. How about that?
I like the way the stock market's looking, especially today. We've had a few weeks now where the markets have been under selling pressure, and that's normal. When you look at that chart that Keith just popped up, overall, man, what a great looking trend. That's a daily chart, right?
It is.
Could we zoom that out to a weekly?
Well, I was going to mention something on this that's really got my attention here, is that we're in a correction. There's no doubt about that's what's going on. When you go from 5,200 to 4,900, that's 5% drop off in the market, roughly.
I think that's more of a pullback.
Yeah.
I mean, do you think?
Well, a correction would take you down to 4,700. So a correction would say down here is where they would normally say. But we're in a little bit of something going on. And what intrigued me is today the market rallied up right to this number right here, right to this 50-day moving average. And that's driven really by Apple announced, some massive activities with their stock. And so that's a big component of the S&P 500. And if I flip over to that, you can see that it was up, it's up 6% right now, but it was up higher earlier in the day. And just ironically, when you see that one stock and the impact on the S&P 500, it's just crazy. It's like a thermos to me. How does it know to hit that 50-day moving average and then bounce off it like that?
Would you go back to Apple?
Yeah.
And one of the fun things about this job, we're not recommending Apple to you, but it's a huge component, like Keith said, of the S&P, or really any of those big indexes. And so if you have any money in the stock market, you probably have some Apple shares. This could have gone the other way. It could have, that's called a gap up, when it closes at a price and then opens up at a price much higher. It could have very well gone the other way.
Yeah, here's another one of those big stocks that did the opposite, right? This is former Facebook. It's called Meta. And it dropped dramatically when they announced earnings. These earnings dates are a huge deal. And as an investor, if you're not willing to accept a lot of risk on one day, that's probably worth talking to us about your stock. There's strategies we can help you with to take some risk out of the market that may or may not create capital gains for you, but we can talk you through those strategies. And so if you have a concentrated position, concentrated or it's substantial portion of your wealth, say 10% of your wealth or 20% of your wealth, there's probably some strategies that are worth talking about.
Yeah, earnings are a big deal. And we're in earnings season. So far, a large majority of companies have been posting pretty good results.
Yeah.
With earnings and sales. But with that being said, it's the reaction to the news that really affects our bottom line. And so a company can come out with great earnings that maybe miss a forecast. And next thing you know, the stock's down. So when you see that, when you see a company that says, hey, their earnings were really good, but the stock price went down, it's that reaction that gave them some trouble.
Yeah, and that's, we've seen, I've noticed a number of companies where it's this quarter, it seems like it's an extreme one way or the other. Either you're going up good or you're going down big, and
I
seemed
think
more
80
so than a lot of quarters, it seemed like.
I want to say I heard 80% of earnings have been positive this earnings season so far. But again, that doesn't necessarily mean the stock price will move up. There's so many factors going on right now. Interest rates that's the biggest one. People like to talk about the presidential election cycle. I think the main thing right now is interest rates. All good. Yeah. You want to highlight this? I was looking at that this morning.
So this measures the volatility of the marketplace in a way of measuring it. It's measuring what are called stock options. It's not actually measuring the volatility of the stocks, but it's representative. It's like a shadow. It'd be the best way to, if we want to see how volatile it is, this is the best shadow we can get. It's called the VIX. And so we if you went back and watched when we were talking back here a few weeks ago, we were suggesting that it might pick up, and the volatility picked up quite a bit in the last couple of weeks, and you can see it kind of rallied up almost 50% there, and it's backing back down into this range. We marked this range out sometime in the past where it's kind of in between here and here, and we're back in that range. What that means in the long term is hard to tell, but historically, when this gets up to 30, it is not good. It's a really difficult market.
Yeah, I was surprised to see the VIX where it is today. It's great. But there's so much competition for your dollar today, with the short-term rates still paying right around 5%. If you're in real estate, the income you're receiving off your rental properties is pretty good. And so there's just a lot of competition for the dollar right now. And as interest rates fluctuate, which we think they're kind of normal right now, but if they were to go down, that could free up some stocks to do fairly well. Maybe they're being drugged down by their balance sheet. Maybe they have some debt that they're paying high percentage interest on. And so, like we talked about last week, where a lower rate environment could really benefit is those smaller cap stocks. Would you mind pulling the S&P 400 up? Great. And again, we had a nice open today, and that's what I wanted to show everybody is had a gap up open. And so there's some conviction coming into the smaller stuff, and that's overall real positive. This one's been a super challenging market to be in. Yeah, things keep going out of weekly. It's been pretty challenging, but we'll see. We're back at that level again.
This is the same level we were at near the end of 2021 before it dropped pretty dramatically. Probably a 30%, 33% drop here, and then it's been trading pretty much. That's probably about the range of where it's been trading, like down below this is where the bulk of all the action happened until Christmas time. It started rallying out of that. So if we go back further and look at it, you can kind of see that these mid-cap stocks are really that's where a lot of profits are made. And then there's times when these things just tend to trade flat. Like
what a season of innovators right there. Yeah, just even like stocks themselves were once Dow Jones type stocks, 30 stocks, or maybe the New York Stock Exchange, and then the NASDAQ came out where there's digital prices and just a lot of innovation happening in that time period. It's very cool.
What's really interesting to me on this, Doug, is that these companies tend to be the future Fortune 500 ones. Like the best of the best. It's like the best of the college athletes become the pro athletes, right? And this is kind of like the minor leagues, but these things historically have been giving you a lot of high rate of returns, and you can see probably I could probably draw this trend line from right here, and probably connect some lines right in here to get you the trend. And for the last decade and a half, this line right here that I kind of drew a trend line on is what we call the relative strength, and it's a comparison. Are these guys as strong as the S&P 500? And for the last decade and a half, they have underperformed the Fortune 500, the S&P 500, the Magnificent Seven or 8 or 10 stocks, whatever they are. And we've been naysayers. We think these guys are going to come out and become the strength of the future, but we'll see. Time will tell.
There's some other areas that we could look at. Well, we're out of time, but there's some other areas of the market that are kind of like this, that are starting to catch some tailwinds.
Yeah, and we're looking out for those for you. Doug, any plans for the weekend?
Baseball and who knows what, it'll be good.
We're a week before graduation for a couple of ours, and they're bringing stuff home this weekend, so we're going to clutter our basement again. So that's the big plans for us. Hey, I hope you guys have a great weekend. If you get questions about any of these kind of pessimistic things of end of life things, somebody got to talk about them, or nobody does, and we did today. So thanks for bearing with us. We'll see you soon.